Good morning. My name is Siddharth Bhattacharjee, and I'm in Sydney. As you can see, the time is 6:39 a.m. in Sydney, and just about an hour and 20 minutes to go in New York before the stock exchange closes. Um, I put up this position on Monday, the the 1st of December, but actually it was 30th of November in New York, and this is a position that I started as a put spread and a call spread in popularity called as Condor, very much close to a neutral delta because I picked the short strikes on the put side, um, sorry, on the call side about 10 delta and on the put side about 15 delta. So which gave me about a neutral delta position. It's 2 days now. The PNL is looking good, just one contract. I'm looking at the chart. It doesn't the SPX, which is the S&P 500 Index, which hasn't moved much, but um, any movement, if it happens, hopefully remains within the short strikes, both call and put, um, so that I can realize the maximum profit. As you can see, when I placed the trade, it earned me $1.60. So just about one contract is $160, and of course the commission structure for options express is a little different from others. So they charge minimum 12.95. So if you take away 12.95 from $160, so the net premium I took from this trade is $147 something, and that's what I'm aiming to. The option actually expires in another couple of days' time, which means the Thursday close of business or Friday first thing the market opens. The this option actually expires. You can see it's December first week. December first week is basically 4th of December. So it's a very short trade, and it is intended to make quick um, trades because for two reasons I prefer a weekly option. The first thing is that the effect of the volatility is minimal, so I probably can pretty much ignore the Vega here. But Vega has got a very significant impact if you're looking at an options expiry 30 to 45 days out, and I would be very concerned. And I had actually burnt my finger um, in 45 days trades, so not willing to do that. And hence, weekly suits me very well that you put the trade once in a week and you are done. And the effect of Vega is not that very pronounced. The key here is the theta. Um, the key reason is it is important is because this is the amount of dollar theoretically you're collecting every day um, um, for one contract position. So theta is where uh, the decay is coming much quicker because the option expiry is barely a couple of days away. But theta decay would have been much smaller had it been 30 or 45 days expiry. So that's another reason I like weekly um, options. The gamma is pretty much neutral. Um, Happy with that, and delta is also close to one or very close to neutral, simply because fundamentally, any options trade is ideally supposed to be delta neutral, particularly the Iron Condors. Um, and it's looking good so far. So as you can see, um, barely 26, 27 hours gone up $65, but that might not always be the case. I mean, it just happens to be a good thing. But the bottom line is that as you put the trade either on Monday or Thursday, the to just make sure that the price, the S&P 500 index should definitely be within the two short strikes, which is um, 2040 on the put side and 2130 on the call side. If this price expires between these two, I'll just walk away with my maximum profit, which is $160 minus the commission. So When I first put the trade, I thought I'll record it from the beginning, just explain the methodologies of how did I come across the trade. This trade nets me around 15.7% in a week. Um, that's probably a little bit more aggressive than I would like to do. Um, Going forward, I think I'm not going to look for 15.9% because that keeps the short strikes closer to the price here. I'd like to go as far wide as possible, simply because I want to minimize the risk in the portfolio. Absolutely minimal risk. Right now, the prices are just about, in standard deviation terms, just about one standard deviation um, away from the central price, which is this. But I'd like to go about two standard deviation, um, just to give me enough cushion. Of course, it will bring down the premium. It won't be 15.7%. It will probably be about 5 or 6%. I'm still happy with that, as long as the risk is lowered. Um, Going forward, the next trade onwards, I think I'll record it in live so that you can see how does it look like. It's a very interesting, way of trading, simply because um, it gives you, the mathematical probabilities in your side, which is great. You need to always put the odds in your favor, or mathematical probability. So this trade was placed, as I said, with 10 delta on the call side, about 15 delta on the put side, meaning that I have 90% of the chance for the price to stay away from the short, or stay um, below the call strike, a short call strike, and 85% chances, more than 85% chance for the price to stay above the short put strike price. So this is the probability I have assumed, and I hope it. And still, there is a 10% chance on the call side and a 15% chance on the put side. But having said that, it's not a bad statistics or a bad probability to have. Um, there's no room for any adjustment because it's very short trade. So I'll use my standard money management methodology that if the maximum loss I can make on this trade is this maximum premium I'll collect, which is $160 minus the commission. If any point of time the gain and loss becomes equal to the maximum premium collected, I just exit. That means I don't make any profit from the trade, which I'm fine with. Um, but that's the key to the risk management. I don't. I wait for the expiry if I'm seeing the price is unlikely to touch the or go to the short strikes and short calls. But if there is any threat to my position, such as the gain or the loss is close to the premium I've collected, I'll just exit the position, just to minimize the risk to my portfolio. So that's all from me for now. Thank you so much for your attention. It's just good fun. You know, how can you risk reward can play in your favor, and how can you manage that? So I intend to put up a couple of more videos just to make sure that the fundamental concept is communicated well, and anybody who willing to learn this trick can also see what am I doing here. Thank you so much for your time. I'll catch you later.